What's going on, everybody? Zach Macmillan back with you again for Let's Talk Mortgage. Still dressed up for work. I didn't even have time to go in there and change before I got on this episode and talk to you business owners out there getting ready to purchase or refinance a home, some things you want to look out for, some things you may want to prepare for when getting ready to purchase or refinance. So please stick around. Business owners, I'm coming for y'all. I'm here talking to you business owners out there looking to purchase a property or property you already own a property or just started a business and now you're thinking about using that income to claim to refinance your home or purchase another home. So a couple key points I want to point out to you, especially when you're self-employed looking to purchase or refinance that home. First thing is you're going to want to claim your income on your taxes. Now, there is certain programs out there that allow you to use your bank statements for income sources in regards to purchasing a home. However, those programs aren't Fannie Mae backed or Freddie Mae backed or HUD backed, which is FHA, or Veteran Association backed, which is VA. So in those cases, in which case those programs aren't backed by those entities, means that program is specifically a portfolio program that a certain bank or institution may offer, in which case they aren't going to allow you to put down 5%, 3.5%, 3%, what have you. They're going to want you to put a lot more money down, closer to 10%, 15%, 20% in order to use these programs, just to use your bank statements as your source of income. Most programs, majority of the programs that allow you to put down less money and go through these other entities like Fannie Mae and Freddie Mac, they're going to want you to use your tax returns to show your income. Now, if you're self-employed and aren't reporting your income underneath your taxes, then it's going to create an issue when it comes to factoring your income when it comes to time to purchase that home or refinance, because of the fact that we're looking at your tax returns for your income, and obviously there's no income there. Something's not gonna work. The math doesn't add up. So when you are self-employed, you're definitely going to want to claim your income on your tax returns so that we can show some income for you when we're doing these debt-to-income calculations and trying to get you qualified for purchasing a home, okay? Now, naturally, when you're self-employed, you become self-sufficient as far as income is concerned, and one of the benefits to being self-employed is some of the tax benefits, some of the write-offs you can have when you're self-employed and you claim your own income. Now, this is where it gets a little bit tricky at. You're more than welcome and well within your right to claim as much write-offs and tax benefits as you can being self-employed. On the contrary, by having those write-offs, those expenses that you list on your tax returns to help lower your income, i.e. lowers your income so you're paying back less taxes. So when we're going to calculate your income for qualify you for a home or refinancing, now your income looks a lot lower because you had all these expenditures listed on your tax returns, and therefore offsets how much income we can show for you. Remember, like I said, when you're self-employed, we aren't using your bank statements. We aren't using your stated income. We're going off your tax returns, your past 2 years tax returns, and creating an average, showing some consistencies between the 2 years. Is your income going up over those 2 years? Is your income going down over 2 years? What actual industry are you in when you're self-employed? Is that industry affected by the current financial climate right now? Is your business expected to sustain over the next couple of years to make sure your income is going to still be coming in? Those things are going to take in consideration when we're factoring your income for you purchase a home or refinancing. So in regards to expenses, when you have a lot of expenses listed on your tax returns and we're going to calculate your income, now your income is a lot less than what you reported. So you don't want to be careful and be mindful of what you're claiming on your taxes as expenses and making sure that we're still able to calculate enough income for you to show you be able to purchase a home. Another thing to be careful of when you're self-employed, you're a business owner, is when you put things on your personal credit for the business, and now we're calculating your income using your tax returns, but we're using your personal credit in order to factor in, qualify you for purchasing a home or refinancing. And so if you have your business vehicle listed on your personal credit, you have your business credit card, business line of credit, you have these things attached to your personal credit and go to purchase your home, remember these things are being counted towards your debt to income when you're getting ready to purchase or refinance your home. And so therefore, it will benefit you if you have the availability or the opportunity to put those things underneath the business credit name or put it in the business account's name. So that way they're not factoring against you when you get ready to purchase or refinance that home and counting against your debt to income ratio. So you definitely want to be strategic when you're your own entity, when you're self-employed, making your own money. You want to be very strategic about how you operate your expenses, how you operate the things on your credit, because they can affect you when it comes time to purchase your home or refinance. Remember, you wanted this. You want to be self-employed. You want to be your own boss. And guess what? Now you have these responsibilities. So I'm just trying to help you navigate those things to make sure that you are still putting yourself in a position to be able to purchase or refinance the home like you want to, okay? When you're self-employed, it's good practice to make sure that you're talking to whoever your tax preparer is, whoever that professional is you have working with you in regards to doing your taxes. You're more than welcome to do your own taxes if you're knowledgeable about this thing, but you want to be mindful of making sure you're having those conversations with those individuals that, hey, listen, I'm looking to purchase a home next year. I'm looking to purchase a home within the next 2 years. And from that conversation, they should be able to pick up that, hey, okay, well, we want to be very strategic about what expenses we're writing off, what things you're still claiming on your income, because they should know, especially if they've been in the industry for a while, they should know some of the things we're going to look at when it comes time for you to get ready to purchase a home. And they'll know that you're not going to want to claim all those expenses on your tax return, so you know it's going to eat up your income and then therefore not allow you to be able to purchase that much of a home. So make sure you're very strategic in having these conversations with whoever that individual is that does your taxes or prepare your taxes, to make sure they know what your goal and mindset is, to make sure they're setting you up for success when it comes to your tax returns. Because remember, that's what we're using to calculate your income off of when you're self-employed, okay? So this is another important point, especially once your business starts to bring in a good amount of income. Since you're not claiming as many expenses on your taxes, it's therefore showing some more income for you, and i.e. may put you in a situation where you have to pay back taxes when it's time to file. And so it's, like I said before, it's important for you to be having these conversations with your tax preparer or whoever does your taxes to make sure that you all have a goal or a strategic process in place to make sure that you're not owing a whole bunch of money back when it's time to file taxes. The reason why I said that is, if you owe taxes towards your time to file, what happens is we'll see it on your 1040 and all your schedules. We'll see that you owe taxes, and actually, okay, we don't want proof that you paid that $5,000 that you owed in taxes this year. We're going to more proof that you owe that $10,000 that you owe in taxes this year. The reason for that is, as you can imagine, it's the IRS we're talking about. So they can place a lien on that property to get ready to purchase, or that property to get ready to refinance. So we're going to want to make sure those taxes are paid, to make sure that additional lien isn't being placed on your property because you have not paid them. Now, the IRS does have those repayment plans that you can set up with them if you owe taxes. But guess what? Now that we know that you owe tax, we're going to actually either prove that you paid that amount in full, or either show us that schedule you have set up with them, that repayment schedule you have set up with them, and now we have to factor that into your debt to income calculations, and therefore may cut into how much home you can afford, because now we have to factor in that payment you have for the IRS to pay those taxes back. So like I said, you want to be very strategic about how you file your taxes to make sure that you are still claiming some expenses. That's the benefit of being a self-employed individual. But you're not claiming so many expenses that is knocking your income down to nothing, essentially. So, like I said, you want to be very careful about how you set that up when you're doing your taxes at the end of the year. A good tip, I won't call it a trick, but a good tip to set up for yourself if you're self-employed, knowing you're not going to claim a whole bunch of expenses this year, is to maybe pay your taxes on a quarterly basis. Set some money aside each month for taxes at the end of the year. So that way, when you get ready to file, they're not just dropping $10,000 on you. They're not just dropping $15,000 on you. You have some money set aside, or you have already sent some money off to the IRS. So that way they have some money in hand to say, okay, well, Mr. McMillan, we see you already paid $8,000 in taxes for the year. You only owe us an additional $3,000. You only owe us an additional $2,000 in taxes this time around. So it puts yourself in a better position to not have to owe as much money at one time, because that's, I think, where the difficulty comes in. Not so much as owing the money, but owing that large amount all at one time. And like I said, now we have to put you on a payment plan and have to factor that payment into your debt to income calculations and cut into how much home you can afford. So like I said, you want to be very strategic about how you do it, okay? Depending upon what time of the year you look to purchase your home or refinance your home when you're self-employed, the program we use for you may require us to show a profit and loss statement for you, because we're a quarter, 2 quarters removed from when you file your taxes. And we want to see how that business is doing right now. Obviously, because we can't show paycheck stubs. We can't pull up your most recent bank statements to show how that business is doing. So we're going to ask for a profit and loss statement to show how that business is performing right now. There should have been a definition of what a profits and loss statement is below me somewhere within this area. I don't know. But you're definitely going to be having a conversation with your accountant, with your tax preparer. And when you're self-employed, you want to be as knowledgeable about the finances of your business as you are about whatever businesses you have. So if you're a beautician, if you have on a nail salon, if you're on a car wash, what have you, just as good as you are at doing someone's hair or washing someone's car, you want to be just as good as the financial aspect of your business to make sure you're successful and be able to show and demonstrate the financial success of your business along with your challenges that you have. So keep in mind that we may ask for a profit and loss statement. So you just want to make sure you have your books, your documents for your business in order when it comes to the financing, when it comes time to get a purchase a home or refinance that home for yourself, okay? I think one of the biggest things, and hopefully you all picked up on, is the fact that when you're self-employed, looking to purchase a home or refinance your home, you're going to want to have your ducks in a row. I'm not even sure if ducks walk in a row. They kind of wander around. But nevertheless, you're going to want to have your things in order financially. Don't come to me saying that, oh, well, I get paid in cash and, I just put the cash in the account, or I just hold on to the cash and just pay my bills that way. That's not going to work. There's no way to prove that. Or I just get the invoice, I write an invoice, I handwrite them and I got these slips. That's not going to work. Like I said, we're looking for all legitimized documents. You want to operate your business with the utmost of financial integrity to make sure that when it's time to get some financing or to leverage some capital, whether that be purchase a home or refinance a home, getting a line of credit, getting investors to come on with your business, you just want to make sure your financials are in order and that you can demonstrate the orderance of, is orderance a word? You can demonstrate that your financial capacity of your business is in line and that you can sort out for yourself. So I think that's one of the biggest takeaways I'm trying to nail over the head, is the fact that when it's time to purchase or refinance your home, as someone who's self-employed, you want to have things lined up in an order. And if you don't understand these things, get help. Seek help. Talk to an accountant, a financial professional, a tax preparer, whoever, to make sure that you're helping you set you up for success when it's time to get these things done, okay? So there we have it, ladies and gentlemen. Business owners, talking to you about purchasing and refinancing your home right here on Let's Talk Mortgage. I really do hope this information was useful. I hope that if you are looking to purchase a home or refinance that home and you're self-employed, that you take this information to heart and that you're make your strategic steps to talk to your accountant or your payroll person, whoever you need be, to make sure that you're setting yourself up for success when it's time to purchase or refinance that home. I can't even talk straight. I'm so excited. I said I can't talk straight. I can barely talk, period. But either way it goes, I appreciate y'all for watching this episode of Let's Talk Mortgage. I can't wait to see you again next time.